Hi, I'm David Bach, best-selling author of Start Late, Finish Rich, with tips on how you can be a smart homeowner despite challenging economic times. You've read the papers, you've watched the news, you've been online. So you know there's a lot of turmoil in both the financial industry and the housing industry right now. This turmoil has created a lot of change, some of it good, some of it not so good. It's also created a lot of misperceptions. One of the biggest misperceptions is that there's no mortgage money available in this country anymore. So let's clear that one up right away. Banks are lending money to qualified buyers. In fact, for qualified buyers, there's never been a better time to buy a home. What does it mean to be qualified? That's what I want to cover today. With all the stories in the media about people losing their homes, if you're a first-time home buyer, it's understandable to have doubts about whether or not owning a home can ever be possible. Let me put your mind at ease. What you aren't hearing in the media is that the vast majority of homeowners in the U.S., over 90%, are making their mortgage payments on time. The secret to feeling comfortable with your mortgage payment is to follow some basic guidelines. So let's address a few questions that might be on your mind. What percentage of your income should you spend on your mortgage? The best way to determine this is to compare your monthly mortgage payment with your monthly income. A conservative estimate would be that no more than 28% of your gross monthly income before taxes should go towards your monthly mortgage payment. So if your household earns $4,000 a month or $48,000 annually, your total house payment shouldn't exceed $1,120 a month. Keep in mind that your total monthly mortgage payment typically includes principal and interest for your mortgage, real estate taxes, and homeowners insurance. Mortgage insurance if your down payment is less than 20%, and association fees if you're buying a condo or a co-op. The other thing to consider is your other monthly obligations in addition to your house payment. A good rule of thumb is that your total monthly debt obligations, including your mortgage payment, should not exceed 38% of your before-tax income. So if your household income, again, is $4,000 a month, your total monthly debt obligations shouldn't be more than $1,520. If you have a monthly car payment and a credit card payment totaling, say, $520, your maximum mortgage payment should be no more than $1,000. Another question I hear a lot is how much down payment will you need to buy a home? One of the misperceptions out there is that you'll need 20% or more of the cost of a home for down payment. The truth is that while lenders do require more now than in recent past, there are many programs available that require less than 20% down, depending on the market you're in. For example, FHA, Federal Housing Administration programs, can require as little as 5% down in many areas. But don't be discouraged by the idea of a down payment. Keep in mind that your down payment is a very sound long-term investment in your future and a jump start in building the equity in the home you will live in. So what will you need to show the bank in order to qualify for a mortgage? Because of the recent changes in the financial industry, the list of documents you'll need to bring to an application appointment has become a little more lengthy. But basically, you need to demonstrate that you have a stable monthly income source and the down payment and closing costs necessary to purchase the home. That usually involves documents like pay stubs and W-2s that show a constant income in the same type of job for at least 2 years. Bank or investment account statements are usually required to demonstrate the source of your down payment and closing costs. You'll need to bring these documents to your loan application appointment. For a comprehensive checklist, talk to your lender about what you need to bring before your appointment. There's one last misperception I'd like to address today. With all the focus on subprime lending in recent months, many people are even afraid to even dream of owning a home because they don't have perfect credit. But while it's true the credit guidelines have become more strict, it's still possible to buy a home with less than perfect credit. Ultimately, the best way to get a clear answer about whether or not you qualify for a home purchase is to schedule a pre-approval appointment with a responsible lender in your area. And if you don't qualify today, it doesn't mean that you never will. You can start right now to improve your credit and your financial situation so that one day you will be a qualified home buyer. Ask for advice from a responsible lender, from a qualified credit counselor, from your banker, or from a real estate professional. They all want you to succeed. They all want to see you in your own home. It's a smart move and a goal worth pursuing. So start today. Take it from me, David Bach. Nothing will change your financial future faster than owning your own home. And the good news is that banks are lending to qualified buyers. Look for more webisodes in this series on YouTube. And for more great information, free tools, and resources, visit my website at finishedrich.com or join me on Facebook.